All right, everyone, welcome back to Beyond the Headlines, episode 19. I was just saying, almost half a year. So we've been going strong, continue to go strong. Great reaction from you guys, which we appreciate. And just while I'm talking about it, if you like the podcast, give a comment, a like, a retweet, a share, all those kind of things. The algorithm likes it and will suggest us to more people. So, on this podcast, what we do, if you're new, is we take a look at what's happened this week from a headline point of view. But both me and Steve and all of Trade Ideas are focusing on data. We're focusing on charts. We're focusing on price action. So, we take a look at what the talking heads in the news is saying, and then we put our own analysis and say, okay, what's actually happening out there when it comes to people that are buying and selling. Cool. All right, Steve, how was your week?
Good. Went by fast, thank God.
It's hot up here. I am not built for this. I know you guys in California probably laugh, but yeah, we're getting heat waves here.
No,
I'm just not. I'm a giant bearded man from Canada. I don't do well in the heat at all. So
I
um,
hear that.
we got some news this week for sure. We had a crazy day yesterday. Actually, let's talk about that first. So this is a bit of a weird chart. So let me break it down. This was the chart of the day from the chart report. Shout out. It's a great little newsletter. But yesterday, what we saw was a massive down move in the Qs. So the Qs were down, I think, roughly 2%. However, the IWM, which is your small cap, was up 4% almost. It was a massive switch. So, what this chart is essentially showing us is that divergence of the NASDAQ being your big tech stocks being down a bunch, while your IWM, which is 2,000 small stocks, a lot of banks, a lot of biotechs, things like that, being up that much. That hasn't happened to this degree since 2001, which is a scary time because that was when the tech bubble burst. Certainly not saying that that's happening. However, that it was just I was blown away because I was watching the Qs all day and I kind of switched near the end of the day to the IWM and was just shocked how much it was up. So, um, let's take a look at that, Steve. What do you think? So let's grab the Qs first, I guess.
Yeah, I mean, technically speaking, the market really had nowhere to go in terms of its rotation. The Nasdaq was completely overbought before yesterday. The S&P SPYs were completely overbought going into yesterday. And then a nice recovery today over there.
Yeah.
Geez, the only thing more confounding about what happened yesterday is the immediate about face today, because I've been around a while and I haven't seen, as you said, since 2001, I haven't seen anything like that. So the compression that was building there in IWM was just monumental, and
Mhm.
it's just crazy that they in quotes made people chase the open on a giant gap. Half of that, was overnight. So, I
Yeah.
mean, you talk about the mother of all rotations. This one was really up there in terms of catching a lot of people sleeping. People who were stuck in the TZAs or the other inverse small caps were taken for a serious ride yesterday. And the fact that we closed on highs just means they were covering all the way into today. Here's my day and a half theory. Here we are into halfway into day number two. Here, I think this is where people start taking profits, and you're going to probably start to see some slippage. But the damage has been done. If you're short, shot across the bow. The small caps are here. Ironically, I've got a lot of small caps in my positions. They're just not necessarily being reflected as well as the index is, which is kind of curious. Maybe I'm just on the wrong stuff. But yeah, it's all about small caps coming into today.
Yeah, and I just want to explain a little bit. So when Steve says rotation, the idea, the main rotational idea is that us, we can go to cash anytime we want. And that's, I always think, our massive advantage over hedge funds and institutions and all of that, right? People are always trying to say, well, how can I beat Goldman Sachs and, all that? Um, I easily, right? I think that we are nimble. They are giant battleships. We are, small little speedboats. And a lot of them have mandates that they have to be fully invested or almost fully invested at all times. So if you're a pension fund, you're not allowed to go to cash like we are. You have to stay invested. So when we say rotation, we mean, okay, so they finally took profits in the Qs, which has just been absolutely rocketing. right? This is going to be mostly Nvidia. The SPY is going to be also quite a bit of large cap, but there's 500 names instead of 100, so it's a little bit less weighted to these big names. But the question always is, when they sell, what do they do? In bear markets, generally people will sell and they'll go to cash or they'll buy bonds or something like that. In bull markets, they'll take that money, the profit they made, and they'll put it somewhere else. And sometimes, and a lot of what we're doing as traders, we're trying to follow their footprints to say, okay, you're going into this sector, then that this sector. Didn't really have to be a CMT or a Brainiac to figure out what they're buying. And that's the IWM, right? So the IWM, again, is your 2000 small cap companies. Uh, the interesting thing about this, which is what we'll talk about in a second too, is a lot of banks. And I always got to program that in my head because up in Canada, we only have five banks and they're all big. I keep forgetting that you guys down there have hundreds of banks. You've got banks all over the
Regionals,
place.
yeah.
Yeah. So there's a lot of banks there. So that could lead us to our next story here, where we're talking about how there was a lot of bank earnings last night. There was Citigroup, J.P. Morgan, and Wells Fargo all reported earnings last night. So this is kind of the kickoff to earnings season. And if we just go through some of these kind of individually,
Well,
and
go
then
to
we'll get into
XLF. I mean, just start with XLF, I would
yeah,
say, because it's a perfect segue from what the IWM, we were just talking about the IWM is painting itself into a corner. It
hmm
had nowhere to go. So, additionally, in addition to the small caps, the financials were just waiting to receive that baton of the rotation. It's
yeah.
like a 400-meter race, baton, stick, boom, go, financials. And then, of course, it dovetails right into their earnings. And the stocks were, the charts were tipping you off that those earnings were probably going to be decent.
Yeah, and that's really what I wanted to point out is look at this day is that big rotation day that we're talking about, but look at the day before that, right? And look at
Mhm.
that candle. It broke the downtrend
Closing,
line and it closed right at its highs, right? A very super strong candle.
nice
So
tip.
yeah, you want to tell me that's not a whole lot of institutions positioning themselves and buying this thing, expecting that at some point in the near future, and it doesn't always have to be the next day, but at some point in the near future, that financials are going to be the place to move. And now we have financials almost hitting a new all time high. IWM wasn't a new all time high, it's still lagging the overall index, but it was a new 52-week closing highs yesterday and then a new 52-week high today. Now, for the people who say, oh, yes, but it's still lagging, I always have to remind people that by design, the IWM will always lag the rest of the markets because they kick out their best players. If you're a small cap company and then you grow to be a large cap company, you get promoted to the big leagues. So
Elevated,
yeah,
like a Reddit comment.
and it's the same like what was it? SMCI skipped the mid caps entirely. It went from a small cap company to a mega cap company almost overnight. So this will always lag, but it's a good place to take a look at for short term moves because even though it's not going to have as good of a trend as the Qs or the SP 500, it's very volatile. So it's a very good trader. But yeah, that's what we're seeing there, and that's what we're seeing in a lot of these banks. Now, if I go to the individual names, I don't really, there's really nothing to really write home about on them. We had some down moves. Wells Fargo, I think, was the only one that went down. I think both Citigroup and JP Morgan had pretty good gap ups overnight. But volatile action. It's earnings day. It makes sense. But seem to be digging in and holding on to these prior highs. And Citigroup of all of them, right? This was the dog still from the great financial collapse. This never got anywhere near close to its highs. Where I guess the star is always going to be J.P. Morgan. If we go to that monthly chart that you can see in the corner here, what a trend on the monthly chart for J.P. Morgan. Just right from what it took 15 or 50 in 2016 up to 200 for a bank stock. That's pretty wild.
Mhm.
All right, now let's go on. I'm just looking at this chart. I don't know. This chart looks really nice to me. The gap down off the
Yeah,
open, the rally to close. This line here is
recovery.
Steve's 10 SMA, and it's coiling up nicely against these. I think I like the look of that, and that would be if we are seeing this financial continuation. that would probably just be more of the same. That money's got to come from somewhere, and it's probably going to come more from big tech. So I'm really excited. I was on Trader TV this morning and they're like, "Man, you're really jazzed up." And I'm like, "Yes, I'm excited for other stocks other than Nvidia to move because
Yeah.
it that's been the tale of the year where either you owned the semiconductors and you made money or you didn't and your stocks, you had to scalp and your stocks didn't go anywhere." So I would love to get
Or
some
all the
more
day traders
gains.
were just all trading the same weekly options in NVIDIA, day after day after day.
Yeah, and it was just so it may finally be time for rotation, which for people who are tuning into this podcast and traded a subscriber is amazing because this is what we do, right? We find the things that are moving at the time, and again, I'm just excited for not to be Nvidia every day. So,
Hmm. Yep.
so we have AT&T according to MarketWatch. Anyway, it's falling because they got hacked. So if you're an AT&T customer, change the passwords, right? Make sure you're not using the same password at AT&T as you are in other places. Again, we don't have that up here, but it says, "Oh, it's falling and it's hacked and it's bad." But like always, we're gonna go into the chart and see what's actually happening. And to be honest, right, as a company, you look at this monthly chart down here. AT&T is not a great company to ever get involved in. These telecoms generally don't do well in general. But over the last little bit, it's from April, it's been a nice solid uptrend here with some good pullbacks.
Yeah. Yeah. The headline just isn't really doing a whole lot. I think people are probably numb to the idea of data leaks at this point. I get emails all the time these
Yeah.
days.
No, and that's right. If there's any cybersecurity tip, is do not use the same password in multiple places, right? Grab a password
Hmm.
manager. That's where you get in trouble. You have place after place after place where you use the same password and all of a sudden one gets hacked and then they have your email and your password and they're going to try it everywhere in the world. But really, the only other thing that I wanted to talk about briefly is we had some movement based off of CPI and PPI. I don't follow any of those things, but that
Right.
everyone says that's what caused the sell off yesterday, but that makes no sense to me because it's just getting reversed today. I think it was just some healthy
Yeah.
profit taking. What do you think?
I think I mentioned to you before we went live, I'm going to make this prediction. What the market is in pre-parabolic, if not mid-parabolic mode, and nothing can bring it down. And when you get to that point of fervor and froth, I think what's going to happen is we're setting ourselves up for a sell the news event. And I'm even going to claim the headline that's going to be the sell the news event will be the actual rate cut. I think the market is just pricing this in. It's getting way ahead of itself, way getting its nose way over the skis, to use a mountain skier's analogy. And I wouldn't be surprised if, when the headline does come that the Fed is cutting, that's when you start to see people running for the doors to take profits. We'll see. That's my prediction.
I think that makes sense, right? Historically, it makes sense as well. Generally speaking, it's very rare to see a Fed cutting interest rates into a healthy economy in a bull market. Usually, when the Fed's cutting, it's because there's something bad happening that they're trying to regulate the market against. And in this case, it's going to be the complete opposite. I don't know what they're going to do if the market's hitting new all-time highs and then rate cuts. It's one of those things that you expect that when the rate cut comes out, that's going to be this massive
Yeah.
catalyst and the market's going to move higher. But I'm with you there, Steve, where I think it's got to be priced in at this point. They have to
Hmm.
know that there is a cut coming at the very least, just to bring it down a little bit. And I don't think, right, we're not going back to zero or anything like that. But and when that happens, I think it's going to be just like you said. It's going to be the time that all the funds are like, okay, we were right. They're cutting rates.
Hmm.
It's time to
Yep.
sell and move on. Now, interesting, and I'll just gonna ask your opinion on this one. But what does that do to banks? Because you got to imagine that, especially the big guys, right? The J.P. Morgans and the large banks out there, they're benefiting greatly from these higher rates because I don't know about you, but my bank still isn't paying nearly as much as they're making off of the loans, the increased price of the loans. So that spread between what they're lending at and what they're borrowing at or what they're giving you is the highest it's kind of ever been. So will that be a catalyst for the banks too, you think, that they'll start falling when the rates cut?
Likely, that would be the headline, but our job is to wait for that headline to come and then analyze the price action and see exactly what is happening. But in theory, yes, that should pinch their profit margins.
Yeah, I just wonder if that's also priced in as well. And then I always like doing, and I'm not generally a contrarian by nature, but in the markets, I like things like that where the initial reaction would be this is going to be bad for banks, and then you see banks start to rip, and then you get involved in them there because you have that moment of disbelief where everybody shorted into the banks, expecting it to be bad. And then, maybe banks move higher and tech moves lower, which would be the exact opposite of what you would expect to
Yeah.
happen when rates are cut. So pretty light news this week, but I think we covered everything that was pertinent and
Hmm.
was interesting. This is the way the markets work. Sometimes the news is going to be super heavy, sometimes going to be super light. I think we're going to start continue to see this light news into the summer months, but we will always be here on Sunday for you guys. We'll dig up whatever's happened this week. And if not, we'll just kind of talk about, what we're seeing in the market. So do you have any wise words to leave the kids with as I'm looking over here and I'm seeing SMR this close from
Yeah.
new
Just
all-time
Rick.
highs?
Yeah. Well, other than the pat on the back for us talking about SMR and putting this on your radar out there, just be careful of what I said earlier. Don't get excited when they cut rates.
Yeah,
Maybe start thinking about taking profits on some things that you do have when that comes.
close, close. Maybe by the time you guys see this, maybe we do have a new all-time high there in that SMR. Again, we're not gonna beat that dead horse too much. Just both me and Steve are very excited because we're both shareholders. So awesome. Again, if you've made it this far into this little bit shorter than normal podcast, make sure you're hitting a like, you're retweeting, subscribing, hearts. I don't know, whatever social media you're seeing this on. Thank you
Bells.
guys for tuning in. We appreciate it, and we'll talk to you
Mhm.
next week.